Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Review. Well, this time of the year, we have many people focused on their tax return versus the return of their tax. And I'm excited to share with you one simple strategy. I'll give you an example. Your friends and neighbors, just like mine, other baby boomers that are focused on things that are predictable, right? We have so much going on in this world that's unpredictable. And on the subject of tax, clearly, we have one political party just barking, one article said, for higher tax. Higher tax, higher tax, higher tax. Why? Well, to pay for guaranteed government-ran health care, guaranteed government-paid tuition, guaranteed government-paid incomes, whether someone chooses to work or not. Folks, whether it's Bernie Sanders who's calling for more tax, Elizabeth Warren calling for a wealth tax, or the young lady out of New York, Cortez, calling for the Green New Deal that's going to cost us all a lot more green, I can assure you, if that deal passes. The time to focus on tax, not just coming up on tax season, but the time to save tax, folks, is right now. Again, I can't make the emphasis greater than this. And I'll give you a great example of this. A particular client we met with this week in their mid-70s, and again, we were with clients pretty much anywhere from 50s to 80s, actually came and was actually referred to us. And we found that by doing 3 shifting and timing strategies, we were able to save them $2,000 a month. In other words, the $2,000 extra a month that they're giving to the government is now going back into their pocket. And let me give you a great example. See, when you save money tax deferred, right, like in IRAs and 401ks, you don't save the tax, you defer the tax. And once you hit 70.5, there's what's called a required minimum distribution. And if you don't take that distribution, the government can impose, and they do, a 50% penalty. So if your required distribution, like this client, was $30,000, if they didn't take that this past year, they're going to have to pay a penalty of $15,000. So of course they took the 30, but not knowing what they didn't know, that $30,000 ended up taxing 85% of their Social Security, which created another $6,000 of unnecessary tax. And the required minimum distribution pushed them into a higher marginal tax bracket. But then if that wasn't bad enough, their traditional brokerage account was throwing off unnecessary capital gains and dividends that all told was costing this client an extra $24,000 a year of unneeded and unnecessary tax. And by simply shifting and timing, especially with the marginal tax brackets being expanded as far as the thresholds and the percentage of tax rates being reduced, now is the time over this next handful of years while we have the Trump tax plan to take full advantage of this. So whether you're somebody trying to get to retirement or better through retirement, please don't be so focused on, as we find, their tax return, but be focused on the return of their tax being your tax. So I'll be teaching one strategy this coming Tuesday. In fact, it's a strategy that not only eliminates the tax to Social Security or gets rid of the government-forced required minimum distribution, which also ends up taxing your kids for a lifetime on what they inherit. I'll also be teaching how you can have an income through savings that grows without tax. You can use it as income without tax. And of course, you can pass it on to your children without tax. Simply go to retirementprotected.com. That's retirementprotected.com and register. It's a complimentary educational webinar. It's not a cost or an obligation, but the space fills up quickly, folks, especially around tax season, where we saved last year cumulatively about $18 million in unnecessary taxes for clients just in 2018. And 10,000 people retiring a day, these spaces fill up very quickly. And this being one strategy that can really help you predictably save money by not paying unnecessary tax, not being focused on their tax return, but being focused on their return of unneeded tax. Retirementprotected.com, retirementprotected.com.